Welcome back. Jyotivardhan, Jaipuria, founder, MD of Valentis Advisors, is with us on the show. Jyoti, thank you very much for joining in. First, your thoughts on the correction that set in the markets in the last 1 month, the way the froth has been, taken off, particularly in the mid and the small cap. Are we done with it? And what is your outlook on the market?
Yeah, so Reema, like you said, the correction was mostly in the small and mid cap. The large caps never saw any corrections, so large caps were good. I think, to some extent, we've been saying it on the shows also for the last few times that the small caps had become expensive. There was a valuation concern. And I guess what triggered it was, the SEBI advisory, which, made people just aware again that this is something which is in the eyes of the regulator. We've seen like virtually a 15% correction in the small cap part especially. So to that extent, at least for the short term, I think there's a valuation catch up which has happened. Some of the excessive valuations have gone away. From here, there may be another round of correction probably at some point over the next couple of months. But I would think, one large part of the price correction is over. There'll probably be a slow price correction. So I don't think we'll make huge money this year in the market, but it will be more like a range-bound sort of price correction, which we'll see.
Oh, that's going to test a lot of people's patience, Jyotivardhan, because people got very used to the fast and furious sort of a way of living on the street, right? So that's going to test a lot of maybe newer investors, younger investors. But good to have you on the show. So tell us, if it's going to be a market that's going to test patience, if we're going to look at time correction ahead, then what's the strategy? Specifically for mid and small caps, what are you advising? What are you doing after this fall that we've seen?
So, what we had done, as we were sitting on cash for quite some time. So it's not like we timed it perfectly. We've been sitting on cash for a few months. So in the last 15 days, we actually have deployed some part of the cash, but we still have like double-digit cash even now. The other thing which we are advising all new investors is please invest like in stages. Or even if you give us, then we are going to invest in a staggered way. We're not going to jump in and buy on day one, but we'll probably spread it out over 2 months or 3 months. We'll get opportunities. We like to buy when the markets are down. We don't like to buy on days like today where the market is up quite a bit. And so it will be like a slow buying. And we have to think of this as the next 2 years, 3 years. This is not like the next 2 months, 3 months. I tell people now the T20 phase is over. Think of it now as a test match. You have to slowly build your portfolio now.
Yeah, I guess that's the problem, right, Reema? Because T20 has become such a flavor that test matches and someone was telling me actually that the Wankhede ground for the Ranji match is completely empty because markets moved on to a very different flavor. But I'm digressing, so over to Reema for the next question.
Okay, so you've been maintaining this buy local, avoid global theme now in our last few interactions. Any reason that we may want to change that considering the US economy is in fine shape?
So see, Reema, there's one thing which you've added a year ago, and which has been pharma, which is not exactly the local economy, because there we think that the US generic market has bottomed out and US generics will start to do better now. So pharma is something which we are very bullish on. The other big thing is the software space, which we've been grappling with a lot. There are obviously 2-3 reasons it comes up on a screen now. One is it has underperformed quite a bit. Second is it's now become less owned, or it's become to some extent under-owned. And third is it's become much cheaper than what it was. At the same time, our concern remains that, the US corporate is not in fine fettle. Like this year also, I think earnings growth is going to be close to zero in the US companies. And job hiring is not in a big way. So I think, we still have some struggle over there. We are hoping to get some bad news, which will help us to, buy some of these things cheaper. But at the moment, like India is still doing well. So, why really go and get into stuff which we have a question mark on growth? I think the Indian growth will still be good. Earnings next year will be double digit, though slower than what we've seen this year. But I think we'll probably still end up with 12 to 15% earnings growth there.
Okay. Any specific themes, mid caps or small caps? Any clear themes, or even large caps for that matter? Any themes where you're looking to deploy? Because you said you were taking that staggered approach, but which parts of the market are you looking to deploy in?
So, one thing which we are deploying now is in the banks. And so not necessarily in just the large banks, but there are a lot of smaller banks, private, public, which are actually quite cheap, which had a bit of pain over the last 12, 15 months. And, now we think that NIMs have settled down at a lower level. The market has generally become aware that the initial NIM burst was because of, the repricing of the loans and the deposits had not got repriced. So we think now, some of these banks which are really cheap, and there are lots of banks which we can get at less than price to book a one time. Those are the banks which we are focusing on. We're buying these in the correction, and we think these will do well over the next 2-3 years. So we continue to play that theme. The other theme which we played for a long time and we continue to play is the whole capex spending. So I think that's the theme where the government capex spending will slow down. It's like even March is not a great quarter. I think next quarter also won't be good because the government spending will slow given that there are elections happening. But I think after that the theme will pick up again. So in the next weakness in the next 2 quarters, we are looking for some of these stocks which are attuned to the government capex spending and where hopefully we'll get things cheaper.
Okay, got that. Jyoti, thank you very much for joining in. Good conversation with you today as always. And we look forward to the next one. So great to have you on the show. Thanks for joining in. Well, that's a view from Valentis. Let's just get back to the market for a bit and check what's going on.